Good morning, everyone. Roxgold is operating the high-grade Yaramoko gold project in Burkina Faso. We discovered the project in 2011 and poured our first bar of gold in 2016. So 5 years from initial discovery to pouring gold, I think speaks very highly of the jurisdiction in Burkina Faso. We've been very happy working there, very smooth process through the permitting, as well as I think the low risk and attractive technical aspects of the project that allowed us to get the feasibility study work done and get the project into production quickly. The standout item of the Yaramoko project is its high-grade nature. At the moment, we're looking at a 17 gram per tonne resource and a very low all-in sustaining cost, sub $700 at the moment. So very attractive margins. It's allowed us to pay down our debt very aggressively and start to build cash on our balance sheet, and really has set us up now for what we hope will be a very exciting 2018 and beyond. So some of the highlights, as you said, I mentioned the very high-grade nature. We recover 99% of the gold. It's very metallurgically clean. It's got great mineralogical considerations, so that's been working very well for us. We're in the process. We've just broken ground at our first expansion project at Bagassi South. I'll talk a little bit more about that. It's less than 2 kilometres from our principal deposit, the 55 zone, and it'll expand our production by about 30%, piggyback off a lot of the fixed costs that we have from our operation, and presents as a very accretive brownfields expansion project. We're also very much just launched what will be a long-running intensive exploration program on our regional package. We have 230 square kilometres of the Houndé Greenstone Belt in Burkina Faso. We are sandwiched between Endeavour's Houndé project to the south, which just came into production, and Semafo's long-running manor project to the north. So we're stuck in a very prolific part of the Houndé belt with some very high plus half an ounce gram material. So we think it's a great environment to be looking for more deposits. The team has done a great job bringing that project into production. It's led by Paul Criddle, our COO. I think one of the statistics that I'm particularly proud of is our safety record. For a greenfields underground mine, the first underground gold mine in Burkina Faso, we've been operating at 0 lost time injury frequency rate and have gone over 4 million hours LTI free. And I think that's a testament to the quality job the team's doing on site, and something that we're very focused on maintaining as a lever for overall quality as we operate the project. And our balance sheet, as I touched on, has strengthened considerably over the last 18 months. When we started production, we had a $75 million project finance facility. We've paid that down, I think, to about $46 million, $47 million, and built $64 million of cash on the balance sheet. So basically over the first 12 months of operation, moved to a net cash positive position, which we're very happy with, and I think sets us up well to fund our internal growth and our regional exploration program. So this year, last year, we had guidance. We increased our original guidance of 105 to 115,000 ounces to 115 to 125, and subsequently came in above that increased, the upper range of that increased guidance at 127,000 ounces of gold. We will be publishing our costs as part of our financials later in the quarter, but we're very confident that we'll be at the lower end, if not below, that guidance range that you see there. So cash costs in the low 400s, all-in sustaining cost in the mid-700s, and this is really testament to a significant amount of underground development. We've put a lot of development in. We've actually accessed areas with the ramp that will be mined in our schedule in over 2 years' time. So this is not an underground mine that's starving for capital. Our development rates have been excellent, and we've been able to put that investment to work to really provide a solid platform for the company going forward. The 55 zone, this is our principal deposit. Basically daylights to surface, and as you can see there, we've drill chased it all the way down to 1,100 metres now. What the deposit looks like it's doing, it's getting better at depth. It's thicker. Some of the intercepts that we've seen at depth have been up to 3 or 4 times wider than what we're currently mining now. Today, it's effectively a single vein. It runs about 3 to 4 metres average width, but we've hit intersections below sort of 1,000 metres that run to about 15 metres true width. It's still 20 to 25 gram per tonne. So we're very excited about what the future holds at depth. It's completely open. We think we can add a lot of ounces. We are progressively starting to put underground drilling platforms in place so that we can do the infill drilling. So we're looking to replace our mining from converting inferred, and I think the future there is very bright. We have had an excellent track record of converting inferred to indicated. This is a coarse deposit, so typically the more data points we have, the more pierce points into the ore body we have, the higher the grade is estimated. And by example, our Bagassy South project, we infill drilled in the first half of last year. It took the grade from 12 grams to 15 grams whilst adding ounces as well. So that additional confidence really allows us to see an increased grade, and we expect, or we'll hope, that we'll see this continuing at the 55 zone. Our 2018 guidance, we're looking for around 110 to 120,000 ounces, similar costs to what we had this year. So I think next year this year should look very similar to what we saw this year. We're spending $30 million on Bagassy South, and that brings that 40-odd thousand ounces of additional production to bear. And we have a $9 million exploration target, which I'll talk a little bit about. And we also continue to repay our long-term debt. So what we've tried to do with Yaramoko, and I think it's certainly developing this way, is build a company that doesn't have to come back to its shareholders routinely for capital. A lot of investors tell us that they don't really like having to be asked to dip their hands in their pocket continually. So what we're trying to do with Roxgold is keep adding cash to the balance sheet, pay for our expansion, as you can see at Bagassy South, and also our exploration, whilst still building cash on the balance sheet. And we think that that's starting, certainly in the single mine junior gold position, quite unique. Bagassy South, as I mentioned, has a total CapEx pre-production capital of $30 million. We've broken ground there at the moment. We're expanding the plant, so it's a fairly straightforward plant expansion. It was anticipated in our initial development. We put a secondary crusher in, some additional CIL tanks. We upgrade the elution circuit and the gold room, and we can take it from 750 tonnes a day to around 1,100 tonnes per day. So as we finish this year, we should be at a run rate of around 160,000 ounces of gold per annum, which we think is important because one of the pushbacks we get is scale. I think taking our mine from that sort of 110, 120,000 ounce to plus 150 is a good first interim step, and hopefully one of many. Just a schematic of the mine, as you can see in the timeline. So by Q4 this year, we anticipate putting ore from Bagassy South on the ROM pad, ready to go into the expanded plant. And as you can see there, still a very compact footprint. We don't take a lot of land. It's a very nice, neat project, low profile, and sits very well in with our local stakeholders. Bagassy South QV1 is open at depth for expansion, and we will be doing a bit more drilling on the two structures at Bagassy South, QV1 and QV Prime, to continue converting inferred to add reserves, as well as trying to push it down plunge and grow the resource. Combined production off reserves. This is my preferred slide, where we look at what the mine life will look like. These are mine planned ounces that some of them happen to be in the inferred category, but we think it's still conservative in its outlook. And we're really planning around a 10-year mine life at Yaramoko, continuing to push the ramp at depth, and hopefully we can backfill those ounces in the later years by extending Bagassy South and also finding some more deposits. On that front, we've got a large program, $9 million this year, around 64,000 metres of drilling planned. Last year, we spent about 80% of our time extending known deposits and 20% doing sort of regional greenfields work. This year, that flips on its head. We do 80% of drilling our pyramid of targets. We've put a lot of science and effort into building our pipeline, and now we're going to get out and hit it. We have 3 rigs turning at the moment on some of our key targets. I'm going to be out of time, but if you'd like to stop by our booth, Jan, our VP Exploration, we'd be more than happy to tell you where our next gold mine is going to be. Thank you.